Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and finance. This week, a special look at the world of commodities. Is it an industry beyond the regulators and law? Are the players speculators, cynical manipulators, or crucial linchpins in a global trade? From Switzerland to the world, they are the giants of commodity trading. But can they shake off the tag of modern-day slave masters? It all sounds pretty serious when we put it like that, doesn't it? But really, in the business world, it doesn't get more important than this. We're talking about the essentials here, commodities, the raw materials and resources that we simply can't live without because they make up everything around us. These are traded all over the globe, everything from oil to copper, sugar to precious metals, grains. You get the idea here. It is a big deal. Now, these are the hubs where it all happens. Basically, on the map, we're talking North America, Europe, and Asia. Note, these are not the places where the stuff comes from. These are where they are traded. And collectively, we're talking over $3 trillion of world trade in commodities. But believe it or not, the dominant player in all of this is Switzerland and the Lake Geneva region. A staggering 25% of world commodity trade goes through that tiny country alone. In fact, if we just take oil as an example, the Lake Geneva region has 35% of the market share of oil trading compared to 25% in another major hub, London. So why has that one region outsurpassed the others in the commodities business? And is it possible to regulate a globalised multi-billion-dollar company which operates within it? That's the crux of our whole show this week.
Switzerland, a country associated with Great Lakes, political neutrality and the Red Cross. But now the country can be associated with something else, the commodities industry. And in Switzerland it is large, very large. Between 1998 and 2010, the Swiss commodities industry increased 15-fold, putting the country at the centre of a global industry. An industry where energy commodities such as oil and gas, minerals like gold and copper, and agricultural commodities, things like grain and coffee, are traded daily to the tune of billions of dollars. To be precise, 1 in 4 of the world's dollars changes hands through commodity trading, and now 2 out of every 3 cargo ships transports commodities too. The profits to be made are astronomical, and Swiss-based companies are cashing in. Take the Swiss-based Vitol Group, which primarily trades and distributes oil. Its turnover for 2011 was $297 billion. And the Geneva-based Glencore, which trades in just about everything, its turnover in 2011 was $186 billion. And the value of that company is set to increase as a $36 billion merger with the mining giant Xstrata enters its final stages. The completed merger would place the company at the very heart of the global commodity industry.
The scale, actual scale, nowadays of the commodity business in Switzerland has a volume of $700 to $800 billion. That's about a global share of about 20 to 25%. The main reasons, from our perspective, why Switzerland has become such a powerful hub is an ingenious mix of tax privileges, of a strong financial sector, and weak regulation.
And the irony is that poorer countries who are losing out are often the major commodity producers themselves. 59% of metals and ores and 64% of all oil comes from developing countries. Increasingly, key commodities also come from politically unstable regions of the globe. As well as the disparity between producer wealth and trader wealth, there have also been a number of human rights scandals. These have forced the normally reclusive commodities companies into the spotlight. The most high-profile incident involved the oil trading company Trafigura. It was based in Geneva, but now Singapore. In 2007, the company bought cheap, low-grade oil from Mexico. The toxic waste was eventually passed on to a contractor in Ivory Coast, where it was dumped. It caused the death of 15 people. It injured over 30,000. The company paid $45 million in compensation 3 years ago. But then a new investigation by Amnesty International and Greenpeace stated the company should face prosecution in the UK. Trafigura's response is a letter contesting the investigation's methods. It said, "We believe the report contains significant inaccuracies and misrepresentations. The report oversimplifies difficult legal issues, analyzes them based on ill-founded assumptions, and draws selective conclusions."
Most of these companies working out of Switzerland are trading companies, trading houses. These trading houses often accept high risks as they become vertically integrated. That means they do mining themselves, as Glencore does, for instance. There are lots of affected communities out there, a lot of environmental damage that has been pinpointed in Zambia, in the DRC, in Colombia, and other places.
Greater pressure is being applied on governments to increase transparency and regulate the commodities companies. Last week, for example, the European Union Committee on Legal Affairs approved a set of proposals to make large companies in oil, gas and minerals disclose their payments to national governments. But applying regulation to highly globalised companies is difficult. For example, Switzerland is not a member of the EU, meaning companies such as Glencore and the Vitol Group are outside the remit of any of these proposals.
The multinational companies are so flexible to allocate their workforce wherever it's convenient, according to tax privileges and so forth. So that's one point. The governments and the states are only reacting to what the companies are doing, so always in back, you know. The second is that the transparency initiatives, sustainability initiatives are only, they're non-binding. So regulators have big problems to really control flows of money, control the production process, control the whole value creation. So over the time, the companies are much stronger than the governments. So we're seeing that sovereignty is really driven by the companies and not the states.
At the heart of the commodities boom has been an increase in the speculation on commodities derivatives. A recent report by the UN Conference on Trade and Development states that this type of trading was worth less than $10 billion in 2000, but by April 2011 was up at $450 billion.
The impact is that the price of commodities are distorted. They do not represent only the dynamics of supply and demand, physical demand. And I would say that there are two major broad categories of impact at the micro level on firms and consumers, and also at the macro level about the macroeconomic stability of a country.
So with the increased speculation, the market volatility, the human rights issues, do countries that house commodity companies run a risk of damaging their own reputations?
I think the human rights violations of a couple of companies in the world, whether producing, whether mining, is really harming the reputation of Switzerland for a couple of reasons. According to the sustainability index of the Dow Jones, the leaders of the industries like Glencore are responsible for a high death toll rate. That shows that it's a high-risk business. While the headquarters in Switzerland are doing a nice job in a nice environment, the mining workers are really exposed to critical working conditions and even losing their lives. So that makes a huge gap between the rich Switzerland and the poor countries.
While commodities companies continue to make billion-dollar profits, regulation of the industry is still weak, while those at the production level continue to be some of the poorest in the world.
Right, so hopefully that puts you in the picture as to what we're talking about here. I want to bring in the first of our guests to speak to that in London, MWAMBWA. He is the Executive Director of Zambia's Centre for Trade and Policy Development. You know, in this world of commodities, it's such a big money area and we see all the people who benefit. Tell me about the flip side in Zambia, the way that, you know, the place where commodities come from, a place where commodities come from.
Okay.
What benefits do you see there, or more to the point, what benefits do you not see?
I think it's essentially like for most African countries, the dilemma is that in spite of the huge natural resource that we see, most of the countries, including Zambia, suffer from the so-called resource case, where on one hand, there is a need for our government and the country indeed to benefit from the foreign direct investment that potentially the multinational companies working in the mining sector can bring. On the other hand, there is the need to translate all this huge investment or this huge resource into meaningful benefits for the ordinary people in Zambia. However, potentially the mining sector in Zambia promises jobs. They promise economic benefits for the country in forms of tax revenues. However, I think none of that has happened to the full satisfaction of the majority of the people in Zambia.
In your opinion, where does it break down? Why does it not happen in the end?
I think it's due to different sets of quite complex factors, most of them due to the international system of regulations, of the way multinational companies conduct their business across borders, the weaknesses of most of the African governments to be able to really assert themselves, have the necessary capacity and regulatory oversight to really take charge of these multinational companies in Zambia.
So you've been taken advantage
part of the problem.
Sorry to interrupt you. Would you go so far as to say you've actually been taken advantage of?
Well, to some extent, you could say that because, I mean, these multinational companies have huge power, huge financial, huge political power. They clearly understand how to work with different countries, both in the developed countries and in the less developed countries. They literally window shop. They get the most from any situation. Most of our countries' mining sectors, for example, are quite detached from the rest of the economy. So they're always one step ahead of any form of regulations. So clearly there's need for a much more sort of concerted effort by the international community, by our own governments in terms of politically asserting themselves, having the right kind of foresight in terms of how really to manage these industries.
In the meantime, though, we'll talk more about regulation in a moment. In the meantime, and this is kind of a loaded question, but why keep doing business with them? If you're saying there are all these loopholes, they've got all this power behind them to get away with this sort of thing, I mean, does it reach a point where you've got to find another partner?
Yes, unfortunately, it's not as simple as that. The challenge that most of the governments in Africa face is that they have desperately need of showing to the large masses of people, the electorate, on one hand, they need to produce results. They need to make the most out of the situation. They have to show that, oh, look, they're doing something about creating jobs, about exploiting, making the most of these natural resources. On the other hand, there's a challenge of really concretely delivering these benefits in the short term, as well as having the long-term strategy of making these countries less dependent on natural resources.
You've mentioned the word regulation a lot, so we should talk about that. Ideally, how would you see regulation work here? Because once you get into tax havens and one set of rules for one and not the other and these sorts of things, I mean, this is one of the issues maybe why the regulation isn't so tight, because you've got different jurisdictions and all this thing. How do you regulate this industry internationally?
Well, the starting point, obviously, and one of the key issues here is transparency. The asymmetry in power, the differences in laws, legislation makes it even more difficult. So we have to really come up with some sort of a multinational framework, an international framework which assures certain levels of transparency, such that all the different authorities are able to see exactly what is going on, not only in their own countries, but also across borders. That's the first starting point. The second issue is with the fact that countries in Africa can no longer depend on these companies to tell them in terms of what is happening in terms of their production volumes, their financial status. You really need to modify and adapt to the international accounting standards, the reporting, the way these companies report, so it's quite clear for authorities to, in a very simple way, be able to assess whether actually what these companies are contributing is what they ought to.
MWAMBWA, it's been a pleasure talking to you, joining us there from Zambia's Centre for Trade and Policy Development. Thank you.
You're welcome.
Well, let's go to Zurich now for the other side of the argument. Martin Fasser from the Zug Commodity Association joins us to tell us about the traders side of things. Thanks for your time. Tell me first of all about Switzerland's role in the whole commodities game. We're trying to explain to our viewers about how there are hubs for commodity trading away from where the commodities actually are. And Switzerland is just such a huge player in it all.
There are various reasons for that. I think to some degree it is also historically, especially if you look at Geneva. Geneva has always been a place of trading of commodity, or trading at least, not specifically commodity, between kind of few hundred years ago, Germany and Italy, France, so it was always a trading place. And then it really kicked in, I would estimate, in the early 1920s, 30, when banks established in Geneva and, as I've been explained, at some point also invented the letter of credit. Then the second move came during the wars, when I believe the big inspection companies, or one of the biggest inspection company, moved from France to Geneva, because the Swiss political system, political environment was more stable than anything else they could find in the neighborhood. And so over the next decades, more companies were attracted, and nowadays it is a hub, as you said.
Okay, so you know what I'm going to say next then, don't you? It's the tax environment. I mean, it's just a very conducive place to do business because the tax laws favour the businesses.
Well, on the tax side, I mean, it's clear. It was a very strong argument, I would say, 30, 40, 50 years ago. But if I look today's situation, then companies that are not yet in Switzerland and are looking to dislocate somewhere else, they are not coming to Switzerland for tax reasons, because there are other places which are more favorable on the tax side. They really do come for other reasons, although Switzerland is still attractive on the tax side. But if you really want to go to the extreme on the tax side, you're not coming to Switzerland.
Okay, then I want to look at some of the controversies, if you like. You know, a company like Glencore is often popularly spoken about. It makes all the big money at the top end. It gets almost a monopoly on the market. And then, as we were saying with our guest from Zambia earlier, the trickle-down effect is just not there. The places where the actual commodities come from, they are getting, and there's a phrase I could use here, but I won't, but they are getting taken advantage of.
Well, in my position, I cannot speak for Glencore, but of course, and it's not the first time I hear that. And here I'm kind of sorry I didn't hear what the person before had to tell me, because yes, it is the perception that it works this way. It's hard to say how you want to quantify the know-how, the risk-taking, the financing powers of the companies outside of the places which actually do have the commodities. So I was actually very interested to hear from this person what measures they take, because so far I only hear it from that we get alleged of, or the commodity trading companies get challenged with this transfer pricing, to give it the proper technical way, but I've never been explained what the countries on the other end do.
Okay, then let me put it a different way, seeing as you didn't get to hear what our previous guest said. The responsibility. In fact, you know, let's show our viewers a specific case here. It's out of Bolivia, but to be clear, this could be transplanted to any number of other places. Back in June, it was Bolivia's president who nationalised a mine belonging to the Swiss mining giant Glencore. He's trying to end a conflict between the miners and the owners, who the miners wanted to take control of the tin mine by force. So it's in government hands now. But, and you'll see in this report from Gabriel Elizondo, there is still trouble at other mines, issues with human rights and underage miners, serious illnesses. Have a look at this.
For many miners in Bolivia, this is their workplace. Deep in a silver and zinc mine, it's dark and damp. One wrong step and they could slip to their death down an uncovered mine shaft. But there are other health risks, not immediately apparent, that are even more dangerous. Deep inside these mines, there's almost no natural air circulation, so it just smells like dust and metals. And this is what these miners are breathing day after day, hour after hour, working in these mines. Almost none of them wear masks. This is Jorge. He's been 13 years old, and he's been working in these mines since he was 11.
I have heard miners get sick with lung disease.
Jorge's father works here as well. As a lifelong miner, he knows the dangers in the air he breathes.
In the mine, there's a lot of dust. Sometimes I get bronchitis, sometimes my kidneys hurt, and I also think it affects my heart. Every time we come to the mine, there's some disease we're exposed to.
Mining is the second biggest industry in Bolivia. Most of the work is done by independent miners with little access to protective gear like masks that would help them avoid the health risks. At the local hospital, we find many miners suffering from silicosis, a lung disease caused by inhaling dust particles that result in breathing problems. NICOLAS CRUZ has been mining for 15 years. He's so sick he can barely talk.
At home, my hands and lips were turning black because of lack of oxygen. That is why I came back to the hospital. My lungs are wasted.
Silicosis has no cure. EDUARDO COPA is in the advanced stages.
There was a dry dust when I worked as a driller in the mine, and that dust entered my lungs. My lungs are full of minerals now. I cannot breathe anymore.
In POTOSI, one doctor tells me 60% of all patients are sick miners.
What I've seen in the hospital is miners die between 45 and 50 years old. We have also seen cases in very young people, 25, 30 years old, who are very sick. It's very worrisome.
Back at the mine, Jorge's father is hoping his son doesn't have to work here much longer, because every day spent in the mine is another day of killing his lungs.
So, Martin, how much responsibility actually falls to the trading companies, and it could be any trading company, as I was saying before, it's not just this one in Bolivia, to make sure that everything goes right at ground level, that the people aren't exploited and that they actually get their fair share?
On the social responsibility, to all the people I talk, that's not, let's say, it's not a why or should we or shouldn't we. It's more the question to what degree or how to define that, because there are extreme questions or demands from one side, and then of course the other side. And so I think there nobody questions the fact that there is a responsibility. It's the question how to best follow that or implement it. And then on the trading side, before there is trading, there is extraction or production. It's clear trading, extraction and production is linked. And so trading cannot deny, in my view, some responsibility on what's happening on the ground. But the first in line to get with the best leverage probably are the extractive and the production companies.
Okay, then I guess this ties in with the issue of regulation then. There is a very strong school of thought that this isn't tightly regulated enough and that it's actually difficult to regulate because of different jurisdictions, different countries, different tax laws, all these things which factor into a geographically wide industry. Does there need to be more regulation?
I guess everybody understands that I'm sort of reluctant on the regulation. Commodity production or the entire value chain of commodity is, in my view, very complex. Maybe comparable to the banks, but banks are highly regulated for a long time. Amongst the regulators on the banking side, I would very much hope they are experts and know precisely how bank works. On the commodity side, I fear this is not the case. And so if we are now talking about introducing regulation on the commodity side, then my fear is that such regulation are more driven by pressure groups and a politician on a re-election campaign than actually doing some fair regulation that really is also to the benefit of the industry and, as we discussed before, maybe the countries where the commodities do come from.
That is Martin Fasser from the Zug Commodity Association in Zurich. Thank you so much for your time. And that is it for this week. Special thanks to our producer Samuel Hunt, who put this show together. His last with us, unfortunately, but we wish him all the best as he heads back home to the UK. Do drop us a line, won't you, about this show, or if you've got a suggestion for a future one, you can send a tweet to me at Kamal AJE or our business editor at Abid Oliver Ali. Email's just fine too. We've got that, counting the cost, at aljazeera.net. And then while you're online, aljazeera.com/business. You can link on to the CTC page from there. We put all our episodes up in full for you to catch up on whenever you'd like. But that is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.